Hello from the 1099contractor.com and locumcrna.com. Today we're going to talk a little bit about car depreciation versus mileage. Make sure you pay attention because this can get you in trouble with the IRS. First, you should know that the IRS has several methods in which you can deduct the expense of your travel, especially related to your car. First and foremost, you should know that you cannot deduct the full value of the car on your taxes and take a mileage deduction, because mileage and maintenance are a portion of that mileage deduction, but so is the depreciation of the car. So if you take a Section 179 deduction, then you cannot do your mileage. When you're looking at the Section 179 deductions, things like the weight, the use, and a lease or purchase all come into play. Within Section 179 for the IRS code, it does talk about cars that are between 6,000 pounds and 14,000 pounds, and those types of vehicles can be depreciated in the first year, and it will depend on the overall expense of the vehicle. There are some outlying numbers if you go into the super expensive, thinking like greater than 100,000. But those cars can be depreciated in the first year with bonus depreciation and your normal standard depreciation. Otherwise, your modern car, your hybrid, your electric, things that are under 6,000 pounds, those would either depreciate mileage or be just writing off the expenses for it. If your expenses are higher than your mileage depreciation, you may consider that possibility. Remember that the use of your car is important, and your accountant's going to ask you if you use the car 100% for business, or if you have a separate automobile or transportation, and then if you have a mixed use. But still, for business purposes and for the IRS, the car has to be greater than 50% business use. So make sure you're following the rules of the IRS publication 463. When you're reviewing these things with your CPA, make sure that you go over the expected amount of mileage per year that you're going to be putting on the car for business, because it may be better for you to take that mileage deduction every year as opposed to depreciating the entire value of the car in the first or second year. The IRS depreciates all automobiles over a 5-year period as the expected life of the car. So that is very important to consider when you are depreciating the cost of your car, and know when you should be able to buy a new car and put it in service. The maximum number of cars for business use, according to the IRS publication in 179, is 5 cars for the business. Make sure you get in touch with me if you have any questions. My email is listed below, as well as follow us on Facebook, TikTok, Instagram, or however you're seeing this video. Thank you so much, and you have an amazing day.